Good morning, everyone. It's great to see you all. Happy start to the week. Let's dive right into this new edition of the morning briefing. So let's get started. First of all, let's start with a consideration. There's a contract change, so the strings are updated. At the moment, for the NNQ contract, for example, M20, 2025. Okay, just like that. For them as well as for Dow Jones and Russell, you need to make this switch, which are now front. Contract, the June contracts, even if definitively the March contracts will be tradable until Friday. So having said that, let's move on to the market analysis. This is a very, very important week. From a macro data perspective, there are several parts today. There is already. So there's an initial data point for consumer spending. So it's a very important data point expected to provide an indication of what might develop. They can be, the developments from a macro perspective. There are various central banks, the Bank of England, the Bank of Japan. Not today, obviously, I'm giving an overview. For the week, there's the FOM, so there are several appointments. This week, the markets are a bit cautious. There was a nice drop afterwards. So the questions, these are the things to do. There has definitely been a nice drop in the American markets, which have, had performance, of retracements all over. About 10% for the S&P, 15% for the NASDAQ. From here, these support levels are very, very important, and it was, the expected rebound at the moment, is around 2%. This rebound is over here. It started to turn down. So these are all the answers that we will probably have this week, as I said, based on the data that will come in. And they will definitely provide more indications to the big players who then, steer the market. We are absolutely small fish. We can only adapt and follow these flows. That said, let's look at it from a technical perspective. Let's take a quick look at it, for example, on a daily chart. Let's choose, of course. Let's change. Let's choose. Here it is. Well, let's leave it be. Well, now I'm asking. The chart, is that of M25? It's precisely for this contract adjustment, though. So after the figure at the moment, this is the rebound that we've had in the last few days. So basically, at the moment, so it's a rebound. This correction phase is certainly not over. We will see if, the market will find the necessary cues to react more strongly. I repeat a lot. Yes, they will say the directions will come from the signals of the central banks, but also from the data that reflect the performance of the economy. From a technical operational standpoint, today at the moment, within the BC3 levels, we're working in this range basically between EWO, HV, O1, ST1. It has bounced a couple of times. So there's an attempt to recover. The important thing will be to recover HV, to look for further recovery. So up maybe towards RD1. Certainly, the level to monitor, because it would represent RD0, would represent the real break. And so, this could definitely aim for that. So at higher levels, we'll see in a moment. Well, at the moment, we're working a little bit below. There's an attempt to recover, but at the moment, the volumes are a bit low, also because they're split a bit between the two futures. So this, influences things a little, the trend. So we need to monitor all these factors. Let's move on to S, a similar situation regarding the general discussion, which has seen a nice rebound. It will be at 2%, so a substantial rebound. If we go through this whole rise, if we analyze it in detail, I don't have the chart ready. Maybe I'll post it later in the chat. But I noticed it on Friday. I had planned to prepare the chart, but over the weekend I was quite busy, and I'll share it later in the chat. In the chat, if we look at this whole decline, at the end of March, at the beginning of March, there was indeed a nice bounce, even bigger than there was at this moment made by the market. And so this could maybe lead to another phase of upward movement, a continuation of the bounce, and then resume a rebound to give a third downward wave. But yeah, I repeat, for now we need to look at what we have in front of us. At the moment, well, we're in a rebound phase. We will see if this rebound will then take on the key dimensions of a recovery complete and a return to an original trend, well, of the long term. Or maybe it's time for a bigger pullback. I repeat, there are still many variables at play, so I won't go on repeating them. You see, the war in Ukraine, European arms, the issues, they're hot. There are many and varied, so the operators are absolutely cautious. Everything is well, it's not in taking heavy positions. Basically, we were talking about IAS, similar situation. Roughly speaking, about the NASDAQ, we're resting on SD1. Basically, well, we're working a bit in this area, which essentially represents, so a nice range with SD2. So here too, RD1, SD2 are the areas to monitor at the moment. Waiting, well, for developments, well, nice range, this one where you can, well, have fun. So waiting for prices to move towards our well-defined levels. Let's take a look at the Dow Jones. Let's call it back. Here we go. Dow Jones has also been switched. In the new contract, you can also use NQ2, M2. This contract, in short, the prices are the same. Okay, it doesn't change. I just wrote the strings for the first period from M, and so from the general future. That's why I provide them with M for a couple of days. That said, here's an additional clarification. Here too, I would keep an eye on this range between RD, also RD1. In short, with the hit SD2. An area that we will probably work on is a break of Rs of RD2. In short, it would definitely trigger a quick test, probably the area of 41,000. This, if not with good probabilities, because, you know, round numbers are always attractive targets, you know, for defense on the part of, well, during a decline, obviously from the buyers. We'll see, you know, the developments. Let's take a look at the Russell. Here it is. Here it is. This is the Russell. The situation is roughly similar. Well, it's Monday morning. It's not happened. In short, nothing particularly noteworthy. I'm worried over the weekend, fortunately, so we're in this range. You see, well, work is being done. There has been, well, the final drop. So Friday's close. However, well, basically we're there within 10 points. From the rise, well, there's some work being done, basically. Low volumes, still because they're split between the two contracts. Let's take a look also to the DAX, which at the moment it's taking a bit of a hit in the sense that it also recovered on Friday, driven by the rebound in the American markets. We'll see. Here, the game is being played. The parliament is dealing with this budget modification. Sorry, the cat. This budget modification. This amendment to the Constitution so as to increase the expenses. We'll see then what. If it passes this amendment, well, how the markets will react, I repeat, it's something we've already mentioned in the previous ones. Morning briefing, we need to understand if the markets have already priced all of this in, or it will be appreciated. So at the moment, they have already appreciated this thing. Obviously, it would be, well, the classic. If by the rumors, sell the news. So in this case, it would become, well, something to short we'll see, well, what the developments will be to keep an eye on. Obviously, also on the contrary, well, in the opposite sense, well, also the situation with bonds, even though, well, we don't really follow them closely. I mean, we don't provide data on bonds, though. So the flip side of the coin is that we need to take a moment to figure out how to approach this. I'm really curious, to see how the markets will react to this amendment. Well, it's very important for Germany, which will obviously influence things a bit also. The other ones with European pages. We'll see, well, the developments. Let's take one last look at them, which, continues. So working has now broken that range. We're working around the 3,000 area, probably an accumulation phase, and that could absolutely make sense. A break, well, of these levels. This ring, well, with bets going higher. So the trend is absolutely defined and upward with continuous pushes. So at the moment, well, we can see a technical point of view. We've been working within BC3 levels of BC3 levels. Right now they are aiming for the upper part of the BC3 level ring, which is just above the HV level. A break of these levels could easily bring prices back to retest RD1. So, and then there you go. The high recorded on Friday morning has been broken. Clearly, you can also aim for levels of 330, 3.035 for higher levels. So I repeat, the gold. So the trend is quite clear and defined. So I don't feel like welcoming. I'm not playing shot on gold right now. It could also be an opportunity, but frankly, I see it strong, solid, and stretched. But above all, in relation also to what we were saying, with all these variables in play, with all this uncertainty, surely they represent, in short, a good thing. The ultimate safe haven. Okay, that said, we've reached the end, so please take care. In short, don't forget to change the contracts. Otherwise, well, you'll find yourself with messed up strings. Do you have any questions? Message me in the chat. I'm heading to the gym soon, so I'll be back in about an hour and a half, and we'll see each other again after the opening. Thank you all for your attention. As always, follow me on social media, and we'll catch up later in the chat.